Let's bring in Alan Nuckman, patiently standing by at the floor of the SIBO. Good morning, Alan. It's a Monday, and we're starting off on the right foot. Markets are bid here. Some of it, I think, coming from Tesla. What are you watching?
Well, I noticed the tone in our friend Ben's voice was a little different this week because his classic test and reject
Alan Nuckman psychology.
Yep. So last week we went to the 4440 level in the S&P, which was a halfway point of this last swing. So that's a super support level. And it held, and we're seeing a little bit of a bounce. Now, if we get above 4,500, then we're going to test those recent highs, and then a breakout of this overall range from 4,400 to 4,600 that's going on for 2 months now. That targets 4,800 new highs. So, we had a test reject. We also had a test and reject of the dollar on the upside for now. So it keeps hitting its head on 105, but now it's back below pretty solidly. So let's see what's next, but I like the setup.
All right. We got volatility hanging out at 14 for VIX, still pretty close to our lows of the year. For all the bears trying, can't really put a bid into volatility. What's up with that?
Exactly. That's my point. Now, we're sitting at 14. That's half of where we were in March when we had that bank issue when a badly managed bank blew up. So we're at half, and we're actually closing in on 3-year lows on volatility. So not to say it can't get a lot lower, because you remember, I don't know, you were a kid, but we were below 10 for the longest time in volatility in the past. So, it's just a number. It's relative. And just because it's low doesn't mean it has to go higher, just like anything else.
Okay. That was a reference to the early wee years of 2017. Yeah, I barely remember those days, Alan. Yeah, I wasn't writing the Bloomberg Daily Stock Wrap every day, or
Right.
That was a single-digit VIX day. So, do you think we could get there, Alan? Single-digit VIX? What's got to happen?
Oh, I definitely think we could get there. I mean, we've been in a bull market for 50 years. We've had a couple of exceptions. Last year so far was an exception, and today is a great example because tech has come storming back. The NDX, the top 100, is up 40% this year, okay? And the stock we're looking at, Juniper, is actually down 10%. So, full disclosure here, we did a Juniper trade back in March, and it rallied up to 33, didn't take out that range high, and I think it finished around 30. So no go. But now it looks much, much, much better from a risk-reward standpoint as far as Juniper's been between 25 and 35 for this year, and I'm looking at the 25 call.
Okay, so you're back in the world of tech. I like it. See, now your trade is lining up with the commentary. Right. You're putting the money where the mouth is, because loving the rally, I love stocks, but here I'm going to buy a gold miner or whatever, I have a little more trouble with that, or an energy company. I love the NASDAQ. Good trades. Good trades.
Of course I wasn't.
But I'm waiting for the big tech bull trade.
Energy. Get Ben on the phone. Get Ben on the line right now.
That's right.
He was poo-pooing that, and now we're about to break out of 90. If we break out of 90, then that targets 110 in crude. And, don't say, that's going to put the brakes on the stock market. 110 is still ridiculously cheap. It's half, excuse me, of the 2008 highs when you adjust for inflation.
Okay.
Half.
Okay, well, that's where we depart a little bit. I feel like if we get to 110 crude, your stock market rally is going to have a little bit of trouble. All right, so tell me about Juniper, because I like the tech vibes after we're talking RMIPOs, the NASDAQ trying to lead. That does seem like a bullish expression of the broad market.
Right. Risk reward, like I said, it's down 10% year to date. NASDAQ, obviously, big comeback, up 40%. So the January 25 call gives you the right to be long from that lower level, that bottom base. There's also gaps up above, 29.50, 30.50, and 33 that all need to be filled. So a break above 30 is the midpoint of this range. That targets a rally back to the range top at 35. And at 35, this option gains 100%.
All right. Finally in the money call, ready for it to ride. Yep. 25 strike. And if you get like Oracle, Adobe, and a lot of the cloud companies doing well, you think, the tech behind it and Juniper would work pretty well too. So it could be an interesting timing for it this week.
Right, old is new again. Look at the leaders in the last couple of weeks. It's been Oracle, Cisco, and Intel. Those are not new companies. Those are not blazers, okay? Those guys have come back, and old has become new again. And so we've seen a pause in the big boys, but we've seen a rotation into these stocks. So this is kind of in that same boat. Juniper's not, an IPO. It's not a company that's, lighting the world on fire. But I love the risk reward here at these levels.
Well, Cisco's been crushing it, and they do share a lot of that market. So you'd think that Juniper might have a little
We've
catch
done another Intel trade, and Intel had a secondary breakout, new highs in Intel. Nobody, and we've had this conversation before. We've done Intel twice with you, I think. Nobody liked Intel. What I'm seeing here is leverage buying in Juniper. That's my key indicator. That's money flow. That's not me. That's somebody is loading up. They're loading up in options because they get a better value play than buying the shares.
All right, 25 strike. Intel with the big move, we'll say, over the last couple weeks. So older is better from Alan Nutman.
Yes, just like me.
Right.
Just like me.
And I set you up for that one, see? I'll give you softballs, Alan. I appreciate your Monday morning energy. I'll give you one right down the center. Appreciate it, sir. Thank you very much.
All right.
Chief Market Strategist, bullseyeoption.com. All right, coming up, let's talk some weather and how it relates to markets.